Welcome back, Ferocious Education. This is that. Today I'm coming up with another one on GHIV. If you'd like to watch my previous one, I do recommend doing so after this one. It's in the description below. Make sure to drop a like to this video to help the channel grow, subscribe, and leave notifications on. I do have here the video broken down to due diligence and then technical analysis. I do recommend that you watch both, but if you would like to skip the technical analysis, you'll find the link to that exact time in the video in the description below and in a pinned comment. Let's jump right into it. So, GHIV, one of the SPACs that is reverse merging with UWM, in this case, United Wholesale Mortgage, and so you'll have a whole new ticker and everything in between. Some of the new events coming up is their next webinar, January 12th at 2 p.m. Eastern Standard Time. And there's also a whole lot of different ones as well, a special meeting coming up, and I'll explain all these before in a second. I did dive a little bit into the SEC filing to try to get you the best kind of information you can get about their valuation and their history. So they have here on their website, it's a very simple website, but you do have some industry news and UWM in the news. Kind of nice to go on and read about it. Some of the things, for instance, was the recap of MBS about bonds sticking to year-end script and pending home sales slide a bit after a banner year, and a bunch of all different things. It's quite interesting to go on and check them, but for now, we're going to be looking into mainly the SEC filing, because that's where the juicy stuff are. Now, the special meeting is happening on January 20, 2021 at 9 a.m. Eastern Standard Time. And that is where you expect that the approval of a reverse merger occurs, and then they have a little bit of time to actually reverse merger. We do have a deadline for that reverse merger, and I'll show you it in a minute. But yeah, so we do have this entire meeting. Now, the next thing we have here is basically their current assets. Whoops, we just got there. Okay, so their current assets here, what we get to see is, as of September 30th, 2020, you have a total assets of somewhere around $425 million, or let's round it up, $426 million. Year on year, that is quite significant. Now, a lot of it is prepaid assets, but their cash and cash equivalent is substantial. Their total liabilities is $19.3 million, compared to last year of $426 million. You get to see the total assets versus liability for September 30th, 2020 compared to December 31st, 2019 is insane. For me, that is usually not seen for a lot of these stocks. Usually you'd find either their liability is higher or they're barely breaking even in that sense. Or, for instance, you'd find it at least comparable. In this case, I don't find it comparable. Now, the next thing here we want to look at is their revenues. They have the revenues from 2020 all the way down to 2019. And this way we can actually look into their comparables. And you get to see the revenues year over year has been actually improving. Right now we're sitting at $3.5 billion. So this is in thousands. And this is actually not, but $3.5 billion. So that's in thousands. Compared to last year, $1.2 billion compared to $593 million, $495 million from 2020 to 2017 respectively. And that is quite significant for me as well. Now, the next thing we want to look at here is their net income. You get to see net income has been seeing a lot of improvement and slipped just a little in 2018, but right now they're sitting at $2.1 billion. In my books, that is really bullish. Now, as I said, this is actually their financial history from the 14A proxy form that they've sent. Now, the next thing we're covering here is a little bit of the cash on hand. So for UWM, the cash on hand currently sits at $755 million as of September 30, 2020, $756 million. We already covered that earlier on. Their total assets right now is around $7.9 billion. Quite significant here. Their total liabilities is around $5.9 billion. Now, a lot of it is warehouse lines of credits. But moving on, still looking really bullish. Their total revenues here as of September 30, 2020, that's historical, is $3.1 billion. Now, the next thing we're covering up is their assets again, but 2019 to 2018. You get to see a double in assets here, going on from $3.08 billion to $6.65 billion. That is their total assets doubling in here. Now, their total liabilities have also somewhat doubled. And so they are comparable from 2019 to 2018. You get to see that the total liabilities and total assets are very much off on the same level. Revenues here, what we get to see 2019 compared to 2018, a really nice significant improvement, more than 100% increase on there, and that is bullish in terms of revenues. We're looking at almost $3 billion to around $593 million. And then moving on, what we have here is net income's looking a lot better, 415 million compared to 91. A lot of this information we have already covered. So what we're going to do here is we're going to move on forward as well again. So looking into their net income, we covered that stuff. Now on Analyst Day, the presentation here is a little bit outdated. It's back in November 7th, but just a little bit of view. They are the number 2 mortgage originator, the number 1 wholesale originator. Sorry, I said originator. That is wrong. My bad. Originator in the U.S. Originated $54 billion in third quarter 2020 for an annualized run rate of $21 to $116 billion in production value. They have a team of 7,080 people on their members with high velocity, low credit risk balance sheet. Their total book value is around $2 billion, while their wholesale mortgage originated through quarter 2 2020 is around 33%, with plus 86 new promoter score. Now, I can go on and on. I did cover a lot of this, but I want you to look at one thing that is quite significant from their books, and I can say this is achievable. This is their wholesale channel share off the mortgage market. And you get to see from 2015 to 2017, it's almost still, and then 2017, 2018, 2019, 2020, you see an additional increase. They're expected to reach, by 2026, estimated around 33% and above in terms of the market share. They dominate with service technology and partnerships. And, okay, so we can move on forward. You can get to see a little bit more of an efficient view between them and Rockets. So faster closing time between them and Rocket, around 12 days less, and the industry average is around 47 days, around 30 days more than UWM. So you get to see that loans per month produced, per production team member, UWM closes 8.8 compared to Rocket at 6.7, and the industry average around 2.3. And this is the entire process. I'm not going to go through that, for instance, but just going a little bit further into setting standards. You get to see that they're 86. They're higher than Rocket, JetBlue, Amazon, American Express, Vanguard, and a lot better than Chase, and the list goes on. Now, their basic motto, their winning formula is faster, easier, and cheaper. You know, if you're in the market for a house, you know, that is all the combination you need. They understand their customers, and that is where you're looking for. And so what they're looking for as well here is not just to have their website as more of a mortgage company, but rather than, and I'll show you here, you can actually even look into houses, into there you go, new home listings. And you can see market data, etc. So it's quite exciting to see that kind of platform. Now coming on towards the technical analysis point of view, because at the end of the day, we want to understand how traders are actually approaching this one and the psychology behind it. On a 1 week perspective, things look really bullish. MACD looks right up nicely. 10 SMA is above 30 EMA. It's amazing. I made a video a while ago, I think somewhere around this region where we saw a massive run. But today we're giving you a quick update on technical analysis point of view. Now, if you haven't done so, please make sure you subscribe down. It really helps my channel, and leave notifications on. If you would like to join our Discord, I'm on there very often. It's more of a chat room. Please feel free. There's no pumpers. We kick them out right away. Now, ADX here, we're sitting at 46.05, and around above 50, that's where you start seeing a bit of resistance and a little bit of pullbacks. Above 45, that is likely. You get to see it went from 1440 to around 1307 as we speak. Momentum still looks good. It doesn't seem that it actually seen a massive pullback on momentum, but William %R is somewhat around overbought. Now, on the 1 day perspective, things look a little bit rougher. MACD looks like it's actually seeing a lot of resistance. It's retracting. ADX is saying, hey, be careful. There is a massive pullback coming up. William %R is sitting somewhere still closer to overbought, but somewhere neutral. And momentum looks really good. It's actually still 186, it retracted a little from it's around 297, but it's still stabilizing there. And you get to see the candles itself we're seeing red candles, but they're stabilizing a little. 10 SMA is above 30 EMA, really bullish. The trading action zone where reversals are likely is 1192 to 1124. It's still above their 50 SMA, the purple line at 1052. The 80X is above 50, so that is a dangerous zone where you can expect a massive pullback at any minute. Now, on a 2-hour perspective, things look a little bit rougher. MACD looks bullish. It says, hey, there is a potential that we will see another run. William %R sits somewhere closer to neutral, and the 80X here shows what seems to be a negative trend. That's because it was pulling up from 57.93 and pulling back all the way probably to 20. Now, 10 SMA is still above 30 EMA, although the trading action zone where reversals are likely is thinning, and it's very thin and it's closing down. 1316 to 1306. Once the 30 EMA, that red line crosses the 10 SMA, that is a bearish sign, and the moving averages turn bearish. Below 1255, it crosses the 50 SMA, and that even makes it another bearish sign. Now, let's move on towards the moving average band. Now, for the sake of the argument, usually it doesn't really follow it. It did follow it for a while, but for the sake of the argument, 1246 is on the top, 1132 in the middle, and 1019 in the bottom. Now, stochastic fast and stochastic slow are both pinpointing towards a possible pullback here. As you can get to see, they're a little bit stabilizing, but they're pointing a little bit downwards, and it might be a little bit dangerous sign. You want them to start pointing a little bit upwards, similar to this area here, where you get to see there was a potential for a run, and it did actually run. Now, moving averages were somewhat choppy. Now, a bit of a point where we get to see other points off key points is resistance supports. Fibonacci retracements here plays nicely at different levels. 1330 is the current resistance on the Fibonacci retracements, followed by 1439. Significant supports sits at 1244, 1184, 1123, and 1049. Now we can get to play a little bit with the price line action, and we're going to do the 2-hour perspective here and try to find significant supports and resistances. The first significant support sits at 1282, followed by 1265, and then we drop down to 1191, 1164, and drop down to 1126, 1108, and then 1097, and then jumping down to 1052. Significant resistances sit at 1316, and then 1350, and then up to 1420. So you get to see there's not a lot of levels. There's only around 3 main significant resistance, but the supports, there's only around 2 or 3 supports before it drops to 1183, and that is the massive risk you're looking at. Now, you can try to go on and try to find perhaps somewhat of a trend or a pattern here. Let's try to look a little bit into 1-hour perspective. It's a little bit tough to say there is a significant pattern. No point where you start drawing for instance, a trend line, you're able to point it all the way from here. So what you start having to do is try to go on with a 15-minute time frame, and that's where things get a little bit messy, because at a 15-minute frame, you're basically trading at 15 minutes, probably is going to play in a day or something and then drop back again. But if you were to look at it, perhaps you can say this is a trend line right now, and if it does break that point, it wouldn't go forward. But remember, that was the same thing yesterday and the day before. So we're not going to draw trend lines here today. We're just going to leave it as it is, but there is potentially patterns here that you can perhaps draw. But just for the sake of the argument for here, because this one is just a SPAC, and we're going to be relying a little bit more on the due diligence. This is not really a pattern. I was trying to draw a box, but we're going to let it as it is. So one of the patterns that I do see a lot with SPACs is up towards their merging date, they start seeing a bit of runs here and there. So I do expect to pull back, and then I do expect a little bit of accumulation, and then skyrockets somewhere around, let's say, early January, end of first week of January, I would say. That is where probably a good entry would be. And then it would probably reach 20, 25 bucks. And then after they get the new ticker, it probably drops back down, and then the list goes on, and then later on finds a support and then jumps back on. Investment wise, this will stress you out if you keep watching it. Trading wise, I think perhaps I'm going to give it a week, and this would be a really significant shot. You might want to get a little bit early on, but that support level is significant, as I did mention. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful day.